ladies and gentlemen of the crypto space. We're live on a Monday, September 26th at 11:31 a.m. How about that? A little bit of on-time action today. With the market doing, obviously, what we kind of expected it to do, the pound collapsing on Sunday night and other currencies looking completely devastated in comparison. They're not far behind. And we'll flip over to the main screen and we'll jump in right to the charts because a reset is needed in how we look at markets. Now, obviously, we can have some sort of dollar top. How the hell is the dollar top without intervention at this point? As the dollar strengthens, it becomes more difficult for other nations' currencies to service dollar denominated debts, which is a self sustaining feedback loop unless the productivity of those respective nations increases, not even proportionally, further than proportionally. If it takes 10% more dollars, 10% more pounds to service dollar denominated debts in Britain, that means the productivity of the business that's making profit in pounds needs to increase by 10%. But the productivity in almost every country around the world is decreasing because liquidity is rapidly being drained from the system. Consumers have significantly less capital to spend. Therefore, not only is the productivity not going up to create 10% more currency, in pounds, for instance, it's going down. So it's that much harder to service dollar denominated debts, which leads to increasing default risk on debts outstanding. The liquidity is best exemplified by the bond market. Oh, on Twitter, they showed it. What are we at? Almost 25% drawdowns on global government bonds, and that's because reserves, whether it be a sovereign reserve or a personal or a corporate, things, assets, bonds are being sold in order to buy dollars in order to service debts, which in servicing debts doesn't do shit for a company's productivity. It's not like they're buying inventory. It's not like they're expanding building manufacturing plants. It's not like they're doing anything that's going to increase the amount of cash flow through their enterprise. All it is barely maintaining their survival. They're just paying their debt, and you have to pay your debt just to wake up in the morning. So this is a devastating environment of absence of liquidity. There's nothing healthy about this market. The yield curves are completely inverted, 3.77% on 10 years and over 4% on 1 and 2 years, and I think even the 6 month or US 6 month 3.7%. Look at that. We're even inverted on the 6 month and the 10 year. There's nothing healthy. This chart is a disturbing presentation of unhealthy. It's just like going into a doctor and the doctor saying, "Holy fuck, you better do something, or you're gonna have a heart attack." With regard to liquidity not being there, and that means nothing about normal business operations is going to occur. Where nothing is there to sustain the normalcy of business operations. There's no capacity to get credit. There's no growth in enterprise. Who the hell is going to lend more money to an enterprise that is experiencing a drawdown in consumer activity? They're not growing. No one's going to lend them money. Makes no sense for growth to occur in this environment. GDP is on the verge of collapsing. Everything that the Fed and all these people are saying is jawboning. I don't know what their end goal is, but they're literally talking up a system that looks like it's about to have a heart attack. So what's the point of a stream about cryptocurrencies on a day like today with the bond market doing what it's doing, with global currencies doing what it's doing, and frankly, crypto assets doing relatively well, but we could easily see volatility. But the point, a good part of the stream of late has been intervention. Clearly, we're way past intervention into degeneracy, where people are just buying bullshit, garbage, things that actually have no reason to exist, and we're literally there to capture the exuberant behavior of other market actors, such as Dogecoin and Shiba Inu and things that have no value whatsoever. They don't perform any type of enterprise utility. And that is the last thing you would want to look at in markets like this, unless you are a complete vulture, which is okay. It's not. I'm not going to knock on people capturing capital gains returns under any market condition, but clearly that takes a certain type of market actor. And what we present on this stream is much more of a passive type of engagement with markets rather than active adversarial type of market activity. There's plenty of YouTube streams out there that talk about adversarial activity. They're looking at technical analysis and looking to reap any kind of capital gains that can be reaped. But we want to own enterprise. We want to attack the market in a more sustainable, hands-off kind of way by owning enterprise. We talk about Buffett all the time. We talk about buying enterprise for a discount, cash flow for a discount, and that really requires intervention. And you help as many people as you can. There's nothing to do in this kind of market, maybe a little bit of adjustment here or there, but this is really protect your dollars. And frankly, if you have dollars, be grateful that you have dollars, and be grateful if you're in a country that pays you salary in dollars, because other currencies are literally just evaporating compared to the value of the dollar. We go through the crypto space with periods of exuberance where personalities on social media are saying dollar is garbage, cash is trash, and that is true under many circumstances, many periods of time. But the state of global financials is that the dollar is all that matters right now. When monetary policy in the United States tightens, um, it's not even just the monetary policy that's offered by the Fed. It's literally just the state of the markets that create monetary policy. The liquidity is gone. If you look at the bond market, there's no buy pressure. It's just sell pressure. Look at this thing, 3.9% on 6-month bonds. Let's look at the 1 year and 2 year for a second. Maybe 4.17. Oof, 4.2. I mean, where's the top? Where's the liquidity? Where's the buy pressure? Where's the capital going to come from to produce the buy pressure if other currencies are depreciating? Because these need to be bought in dollars. So that means a 10%, whatever the drop was in the pound yesterday. Oof. Since, oh, that's last year. Let's look in January. 30% collapse. How the hell is anyone in Britain buying bonds if their value of their currency collapsed 30% this year? Where's the buy pressure going to come from? So this is the relationship between currencies and debt markets. Where does the buy pressure come from when other currencies' value is collapsing compared to the dollar? And that plays into the capacity for enterprise in those nations to produce excess cash, produce liquidity for them to even entertain the notion of buying something like a U.S. government bond. And obviously that plays into tax receipts for the government, and the governments are literally just corporations where they have income, where they have either excess or not excess liquidity to either service their debts or buy extra assets for their reserves. Britain's not buying extra assets for their reserves if their tax receipts are going down. So it's the same exact thing. It's the same thing whether you're looking at a private corporation or a government. Now, obviously, Luke Gromen presents everything in a very interesting way with regard to energy, and that really is endgame. If a country cannot buy energy in a currency that they could print, that means they're buying energy dollar denominated. In this type of environment, it's a path to complete collapse because they need to buy energy no matter what. But if their currency is down 30% relative to the dollar, they have that much less buying power for energy. But if they could buy energy in pounds, all of a sudden a tremendous amount of pressure is relieved from their system. That would change everything. So really what Luke talks about very well is the de-dollarization of the energy market. If you don't have to buy gas, oil, natural gas, so on and so forth, in dollars, and you can buy them in pounds, and the government can print pounds, it changes everything. So I don't have the charts up. There's the I just looked over the 6 month, the 1 year, and the 2 year, and here's the pound. And it was just a catastrophe last night. Let's look at the let's look at China. Almost there. Almost to 716. I thought I had lines up. I thought I had some charting. It's getting close though. It's going to be pretty. This is the week. This is a week where everything happens, and it starts with one currency of a country reaching a threshold, and then they cascade into to other currencies in other countries. And if this thing crashes down, it ripples. It ripples throughout the system. It's all connected. What was I stating over the last couple of weeks? We were like a 0.5% from fighting over toilet paper again, and now it's a little bit closer than a 0.5%. It's 0.38% from fighting over toilet paper because it's all about structure. Technicals are all about structure. Trend breaks, you know, directionality, and once you breach a threshold, everyone sees it. All eyes are on. So all the market actors see that something significant happened with regard to the overall structure of the market. And that's what we see happened with regard to bonds. Now, for the last 41 years, we've had a very obvious downtrend, log chart, of course. But that broke out and it retested and printed the higher high. You guys know how we talk about that, the trifecta of bullish confluence. Now, obviously, bullishness in yields is not what we want to see, but that's the breakout, the retest, and then the higher high. But it's a significant higher high because not only is it a higher high relative to the breakout and the retest, it's a higher high with regard to the past two highs. So it's a higher high on a multi-year basis dating back to 2014. This is a devastating structural trend breach. Okay, cancel. There we go. That is the breakout of all breakouts. Everything around the world is priced based on the 10-year treasuries, right down the pipe of the yield curve. And this chart is not presenting palatable directionality. The fact that we opened this week and we're pushing back up against the wick of last week's close, it's a directionality. It's just everything's getting sold in order to buy dollars, in order to pay dollar denominated debts. Let's go back to the DXY and take a look at where that's at right about now. 114. 114. Wow. Sunday night, we hit 114.5 as the pound was crashing, and now we're back above 114. There's no sell pressure against the dollar. No one's selling dollars. It's all buy pressure on dollars. So what's the intervention everyone needs in this type of market? It's you have dollars, you're fucking lucky. Be grateful and appreciative you have dollars. Be grateful you've saved what you've saved. Be grateful that your yield instruments, your enterprise ownership, be it equities, be it REITs, be it crypto assets, produce cash on a Friday. Be grateful that you have any income. And obviously, the vast majority of the crypto space is dollar denominated, so you can sell your yield for U.S. dollar stablecoins, so you have great purchasing power in any country. So obviously, you convert a dollar to whatever currency, the dollar is relatively strong, so a dollar stablecoin is relatively valuable. And as I've said many times, this is a period of austerity, so expect your revenue, your salary from your cash flow productive assets to significantly decrease. Expect the face value, the principal portfolio valuation to decrease, but it's still there, and that's what's so appreciative. We still have these assets that are mostly proportionally decreasing in relative valuation, but they're still there, and there's still a tremendous amount of liquidity in the crypto space. So that leads us back to the notion of survivability. That leads us back to what is meaningful and what, not DeFi, stablecoins. Hold on. I want to show you the liquidity in the system. $54.84 billion worth of liquidity in the system. That's extraordinary. What an extraordinary achievement in 2 years' time. What an emerging market that captured liquidity and has trapped it. The liquidity is sticky. Incredible. Let's go over some comments, help you guys out. 39 people in the stream, 8 likes. We can do better. Jack those numbers up. These are some rookie numbers. Void Giraffe, hello, hello. Tapsy, what a nice surprise, a pleasure. Geo, when we get to the bottom of Bitcoin, no time soon. To the bottom of Bitcoin, you're going to want to watch the dollar for a reversal, and right now it's completely breaking out. You're going to want to watch bonds. You can look at various parts of the yield curve. You can look at the short end for the banking infrastructure, but that's basically completely thrown off and skewed because of reverse repos. You look at the long end with regard to sovereign debt crises. You can look at the 10-year right down the pipe for basically more or less a general representation of what the hell is going on with regard to that market. And this is an absolute catastrophe in the making. 4% on 10 years would be extraordinary, not because 4% the number is extraordinary, but because 4% is completely structurally inconsistent with the requirements of the yield on this duration of bond given these market conditions. Given what is needed for growth in the system, these yields are unsustainable, and it's literally completely breaking the structure of the trend for the last 41 years. And this structure tells you what is required for status quo, for continuation of status quo. And this is the interruption of status quo directionality. It's moving in the wrong direction for things to continue as they were occurring when we were in the trend structure. This is a trend breach. This is a breakout. It is not just a trivial breakout. It is a massive structural breakout. Structure is everything. Tapsy, what are the 500 tabs in the browser? I got many tabs, obviously, but a lot of it's personal. But I keep Ethereum up. What are we at? 40, Gway? 27? So we burnt a little bit today. I think we're at 8,500 down to 83.47. That's pretty good. Good to see a little bit of deflation. But the amount of disinflation is extraordinary. We would have had 143,000 Ethereum supply increase 11 days ago, but because of the change in monetary policy, we only had 8,000, which is basically zero, relatively speaking. So it's wonderful to watch this, to see the extraordinary disinflationary collapse of a currency. Talk about monetary policy tightening. Ethereum. So central banks around the world are starting to tighten. China's another story. Obviously, the U.S. is tightening, but other ones are trying to tighten and keep up with tightening. But Ethereum just hit the most extraordinary monetary policy tightening of any central bank on the planet. This takes the cake by far. This is an absolute collapse of liquidity. Now, obviously, from a sovereign perspective, it's different than Ethereum. We want Ethereum to significantly increase in value, but if a country did anything like this, it would be a complete collapse of activity. This is a whole different consideration from what the desired effect is. You want cheap money for countries to actually engage in velocity and activity, but we want or there's benefit for the price of Ethereum to go up and so on and so forth. And I would say, and many would argue, that this is what you want. You want a strong currency, but countries wouldn't benefit from a strong currency with regard to the capacity to export. But there's no exports from Ethereum. So if you're looking at Ethereum like I like to do, from a monetary policy standpoint, from an emerging market standpoint, this is what you want to occur. You want scarcity. You want the price of Ethereum to go up. You want it to be more expensive to operate on the main chain. You want zk Sync. You want Optimism. You want Arbitrum to facilitate cheaper transaction fees on an L2 network. You want mainnet to have a premium because it has the increased security as compared to the roll-ups. So this is all heading in the right direction from a numbers perspective, from a structure perspective of what the functionality of these systems are. So these are good things to see. And it's actually quite extraordinary that the merge occurred, and this extraordinary monetary policy tightening occurred just as the global sovereigns are just figuring out that they got to tighten monetary policy to basically prevent their currencies from collapsing. Some of them are going to be too late, and the U.S. is probably on the phone, probably on some serious phone calls around the world with central banks begging them to unfuck the system with the strength of the dollar. The strength of the dollar is causing the world to basically have currency crises. And once the world has currency crises, that's going to cause a crisis in the U.S. Treasury market. This does not go down until the pressure on other central banks is alleviated, unless the dollar demand is alleviated. How can you buy? You can't buy treasuries. You can't. It doesn't work. Something has changed significantly. The flow of capital has changed significantly. Aaron's in the house, a pleasure. One curious view. Thoughts on REN-based decentralized liquid staking? No idea what it is. Yo, happy Monday, Rational Crew. MFN Coom is in the house. Something broke today. Took it. Take a look at cable USDG. Yeah, well, the pound broke, my friend. Yeah, very much broke. Very much broke. It's sticking. It's sticky right to the bottom. Bank of England is definitely on the phone with the Federal Reserve today. Definitely on the phone with them. This is very sad to see. I should call a couple of friends over there in England. Very sad to see, guys. This is nothing that any of you did personally. This is the malfunctions and the errors and the policy errors made by the country, made by the relationship between the country and the United States, and obviously the complexity with energy and what's going on in Russia and Ukraine, and just the partnerships and the deals that the countries have made with each other around the world, and the dependence on foreign nations for energy. This is why the entire world is heading towards deglobalization and self-reliance, self-sustainability. They're too dependent on other nations for their energy, and especially too dependent on other nations and their energy priced in dollars. This is not going to work. There's going to be some sort of structural collapse that will warrant structural intervention. Otherwise, you're literally going to have just chaos in countries where the value of the currency is not suitable to maintain social order. And we've seen the tip of the iceberg already in 2022, and it just gets worse from here unless something occurs from a coordination standpoint between central banks. Because ultimately, that's all a currency is. Currency is an incentive system to facilitate social order and organization of labor. And if you don't have a currency with value or instability and a volatility in the currencies, you have to question the capacity for a country to maintain social order, continuity of labor and productivity. Caleb, yeah, I have it up, Tapsy. Caleb, do you think we're at the end of an era? Might the world look, if it continues? I think we're still trying to digest that. That's really, like Luke Gromen and Brent Johnson. And they're the core theories, and obviously Raul has a good understanding of that. Hugh Hendry has a good understanding of it. Very few people don't understand how bad of a situation it really is globally, and it still really is speculation what plays out because a lot of it is subjective and dependent on the decision-making process of central banks and how they organize with one another to to control or attempt to control, because that's unfortunately that's what it is. They're trying to control the outcome of financial activity and financial coordination, and then you'll eventually have the politicians get involved with legislation and fiscal processes. They'll have to restructure. Yeah, we're at the end of an era. Definitely, Raul. Hello, peas in the house. Noah, Emmanuel, you have a very large bill, and mom's suffering. I'm very sorry, my friend. Very sorry. There's a lot of people suffering right now. A lot of people ask me for money, but I have nothing left. It's very difficult situation for everyone, and everyone on the stream needs to be grateful if they have anything remaining. And this is not a period to find what's outperforming. This is not a period to figure out what the next big thing is. This is a period to find what survives. And frankly, I would argue that what survives has the potential to be very significant with regard to infrastructure, with regard to what is important going forward, because it was able to survive extraordinary conditions. That's the deal. Thoughts on TLT? Broke trend. Believe me, everyone's looking at this. Everyone is looking at that catastrophic trend breach dating back to lows in '07. Man, it really got ahead of itself up here. Look at that trend to the upside, and then it just broke to the downside. The dollar does not stop going up unless TLT stops going down. And it broke trend to the downside. Not only did it break trend to the downside, it just blew right through it with wicks and a gap, more or less. Oof, that is a devastating breach to the downside, Andrew. S-Verb, Happy New Year to you as well. Thank you. Fearsome, yesterday I watched a video about Curve and DeFi Mania. The good old days, so much energy. Well, we still got the same energy, and I'm still excited about everything that Curve offers. And frankly, Yearn's YCRV, which will be the evolution of their YVE CRV, and they're basically their Curve vaults, is quite interesting. I think we only have speculation to know where it heads with regard to being what I would argue is the ultimate crypto cash flow uh, productive asset. And that's because of the Federation. I still think all those ideas are spot on, and that's where the core of my portfolio will remain with regard to uh, the expectation of survival. There's too many protocols that are dependent on the Curve ecosystem for survival that, that they will pay to survive. They are. It is a requirement for protocols to continue to accumulate Curve and reserve for their own individual survival, and that ensures obviously the survival of Curve as a functional piece of infrastructure. Facilitates capital flow, facilitates velocity, capital expansion, especially as the Curve USD comes online. My opinion is still very high to the point where I'm comfortable with expecting continued principal depreciation. I'm expecting continued weekly revenue, albeit it's a period of austerity, so that revenue is basically just down 40, 50, 60, 80%. Compared to all-time highs, it's down 90%. But it's still there. It's still greater than zero. And therefore, we must be appreciative that it's still greater than zero. Um, Digital Nomad, are you familiar with Richard Werner's work on interest rates and monetary theory? Am not, my friend. I'm not. All large banks in the West created more debt through 2021, 2022. This entire sell-off has been in anticipation of less credit creation. Less credit creation didn't happen yet. Um, well, sure. Credit creation facilitates expansion, and clearly we have the antithesis of expansion. We have contraction. The only reason they're saying we're not in a recession is because employment is still relatively high with regard to a percent of the population that actually has employment. but the capacity for an employee to grow and sustain their well-being and be prosperous has evaporated. With inflation, consumer price inflation where it is, they're struggling. People are working one, two jobs. So the employment is high partially because people are working multiple jobs. If you have, let's say there's 150 million people in the United States working, but they're working two jobs, clearly the employment numbers are up because it's not just one job, they're working two. So everything is skewed all over the place. And I think that's probably the biggest thing that they're missing from the employment numbers is the amount of people that are working two, three full-time jobs. That's skewing the amount of people that are employed. And there's just such a large population in so many countries that are not part of the labor force is extraordinary. I think they're literally pursuing the wrong policy. I think there's a crisis of labor, a lack of labor. It's not it's not a tight labor market. It's the antithesis of a tight labor market. In fact, the vast majority of people probably aren't employed or are extraordinarily underemployed. What an absolute catastrophe going on. I hope that helped, P. I understand, my friend. I know it's a catastrophe. We've gone over this a couple of times. I wish you the best. I really do. Digital Nomad, I think it's because they just use credit and managed to get by. Banks still loaned out more in all of 22. Um, yeah, I don't know what that means. Banks still loaned out more. M2 velocity Fred. This is the money creation process of commercial banking. All right, they did. Let's zoom in. I mean, sure, they loaned out more, a little bit more. I mean, come on, my man, Nomad. Let's reset this. I mean, they loaned out more. You see that little bump there, 1.148? That's cool. That's nice. That's a little bit. But this is a collapse of M2 velocity. There's no money creation process going on. This the velocity of M2. That's because obviously the denominator has increased so much. We could go to M2. Just the numerator has increased. I mean, the denominator has increased so much that you would just need such an increase in lending to accommodate the amount of currency units that have increased in circulation. Now, the problem is this paints a very distorted picture with regard to supply and demand of currency worldwide. You have a substantial increase in the denominator, but the demand for that currency has far exceeded the increase in supply of the currency. So folks on Twitter are very often saying, it just goes up. It just goes up. Yeah, because the demand goes up. And the real responsibility of a central bank is to meet supply and demand. And that's how you cure consumer price inflationary pressures by meeting demand and not exceeding by meeting demand and not overshooting. And obviously, if there's too little demand, you have to decrease supply to balance it out. You don't want a currency to increase or decrease in value. Um, and that's an interesting reality, which is the antithesis of Bitcoin. You don't want a currency to increase in value because it's too scarce, just like you don't want it to decrease in value because there's too much of it. And that's not what's occurring. What's occurring right now, we have is currency increasing in value because there's not enough of it. This is exactly what would play out in a Bitcoin denominated global currency system. You can't have that. This is literally demonstrating to us why you need a global currency that both increases and contracts in supply very, very fast based on demand. Otherwise, you have a dollar that's going up way too much in value, that's completely collapsing currencies that are paired against it. And it creates complete global disorder. And that's what's occurring right now. There is an extreme lack of dollars, which is crushing the value of foreign currencies, which is putting immense sell pressure on the U.S. Treasury market, which threatens everything because the U.S. has to print $5 trillion worth of treasuries every year. I could look up the balance sheet and get a more specific number. You know, the gap between tax receipts and uh, the top line expenditures. But if the print, let's say, $5 trillion a year in treasuries, who's going to buy it? Who's going to buy it if TLT is breaking down? The long end of the curve is breaking down, and the short end, well, the short end of the curve is a whole other story because that's really the banking system, and the reverse repos have 2.3, $2.4 trillion, whatever the hell the number is today, worth of capital that could be thrown right into the short end of the curve. All they have to do at the Fed is turn off the reverse repo rate, and all that cash will have to go into bonds. But then again, there's all the rules with regard to the composition of the bank balance sheets, and maybe they can't buy all those treasuries, and they'll have to rewrite the rules and adjust the rules, what kind of composition the bank balance sheet must be in order for it to be, whatever, sustainable and safe and healthy. Um, I look at their books. The top 10 banks in the West have what increased loans. Yeah, we look at the velocity, and the velocity, yeah, it's up barely as compared to the 90s. It's completely devastated and collapsed. So we have the commercial banking money creation process not being very productive at all. We have Jeff Snyder's work with Eurodollars basically contracting in a horribly disinflationary fashion. So basically, we have a situation where the two money creation processes of the world are not keeping up with the demand of dollar currency units that the world is demanding. And that's why what is occurring is occurring. A bankruptcy attorney, when will I be flooded with clients? Well, the, when the GDP collapses, there's no way to put timetables on it, my friend. But basically, well, if unemployment goes up, that means, well, unemployment. If you start to see 5, 6, 7% unemployment, then people aren't going to pizza shops. They're not shopping at the small mom and pops. And there goes all the loans and everything that was required to get those businesses off the ground. And they go bankrupt. They default on the mortgages, on the debt. And then they go to the courts, and that's it. You're looking at unemployment numbers to see that because that's the cash flow through the system. That's the general public purchasing consumer staples, goods, and services. That's the deal. What a great day, Cosmoverse and Noah streaming Cosmoverse. Cosmos V2, Cosmos, integrated into the BSN. There's obviously a catastrophe looming with regard to Chinese currency, but it's in. They will restructure everything. They have a totalitarian grip over the financial system over there, and if they're going to pivot to some sort of new type of currency system, they're going to do it first. So whether with regard to value, that's a completely different aspect of the conversation. But with regard to the deployment and consumption of the systems that they've built, the stuff that's integrated into the BSN is basically first on the list to be consumed with an effort to maintain social order. Clearly, if the currency units are not valuable enough to maintain an effective incentive for people to be employed and engage in an orderly social way, they're going to be forced to deploy tools and new utilities and services and infrastructure to aid a failing historic currency system in maintaining social order. And this is exactly why everyone's talking about CBDCs, because it gives them a capacity to do different degrees of monetary policy and different degrees of capital controls to facilitate social order. It's all about social order and incentivizing orderly behavior. When a person is employed, they are behaving orderly. They're not engaging in criminal activity or questionable behavior. They're going to work and being productive, either doing some sort of labor to facilitate business activity, or they're actually producing a good or offering a service. But that is all based on the incentive of compensation using currency units. So the currency units being volatile like this are really throwing the capacity for a country to maintain social order into complete disarray. That's where we are. That's this week. That's the story of this week. We're on the threshold of social disorder because a country, or many countries, a laundry list of countries, are really on the edge of losing the capacity to incentivize social order. That's the deal. Now, obviously, this is a very large conversation, and we've digressed in many different ways, but this is just really me trying to help folks intervene in their desire to buy things to outperform. This is not a period to outperform. This is a period to be grateful, to have had achieved whatever the hell you have achieved. Protect what you have, survive, pay your bills, because there is a period of time, just like in May of 2020, where you can buy anything and you're making multiples on your capital. Just wait. Just wait. I mean, you, Henry, said it, I believe, yesterday on whatever channel I was watching. Cash. Just be grateful to have cash right about now. And and dollars. Specifically dollars, because other currencies, yeah, you can play currency markets. Usually, historically, they're not volatile, and then you have to deploy significant multiples, and you can make fortunes with this kind of volatility. But you could literally now, with the crypto space and the ease of being able to purchase U.S. dollar denominated stablecoins, you could play dollars versus risk assets. And I personally favor crypto risk assets as compared to equities. I think this type of market, the permissionless of the market, is the most exciting market to operate in. So for me, this is where I want to be. I want stable coins, and I could pay for things with them, and I could also purchase my chosen desired risk assets with them. So this is the place to survive, because what emerges out the other side will have survivability attributes written all over them, because those are the protocols that survive, and they're more likely than less to become base level infrastructure. Therefore, new protocols, let's say 2023, 2024, when liquidity conditions improve, and new protocols and new businesses and new enterprises are starting to form around this base level infrastructure, they're going to use the base level infrastructure. So basically, everything just funnels through the stuff that has survived this liquidity crisis. And imagine that. Imagine billions, billions a day of transactions and volume and cash flow and velocity going through these base level primitives. And those base level primitives surface cash flow to us. So that's why we have made these choices. Well, I have the kindest of words, P. I wish you the best. I really do. And we'll end on a note of hope, and we'll end on a note of shared appreciation for the pain and suffering that's going on around the world. And clearly, we're talking about literally developed markets. DMs compared to EMs, emerging markets, are an absolute catastrophe. Most of the time in the news and the media, you don't even hear about the emerging markets. You don't hear about the structure of economics in African countries. It's a catastrophe. It's the complete disorder, complete chaos. It's not survival. It's just pure suffering. It's pure suffering, and my heart goes out to the entire world during this time. And that's why I do literally the only thing I can possibly do is help and encourage people to survive this period of liquidity crisis. We'll take it one day at a time. I'll be there with my shit posting on Twitter. I'll be there in our Discord forum to help maintain rationality, but at this point, I think the entire community on Discord helps maintain their own rationality and make good decisions, or at least the best decisions possible. And we will get through this together as a community. I wish you all the best. Monday, September 26, 12:15 p.m. As always, after party on Discord for the most rational community in the entire crypto space. I wish you all a good Monday. I will be at conference. I'll be at a conference this week, so I'll be back on Friday, but obviously I'll be around on Twitter and on Discord. Catch you next time. Peace.